Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Dipan Mehta is also there with us, and Saurabh Mukherjee of Marcellus Investment will also be joining us in just a bit. Dipan, have you taken risk off your portfolio? What are you recommending with stocks like an HDFC Limited or a Bajaj Finance?
No, I think we are also just kind of staying put at this point of time and waiting for some kind of a bottom to be formed and seeing how much deeper it can go. I heard Anuj say that, markets sometimes, tend to go on the extreme. On the top also was an extreme, bottom also will be an extreme. What that point is, nobody knows. But we just need this market to stabilize before we start putting money to work. Do keep in mind that it has been a bull market for many, many quarters and months. And it's not that everybody is sitting on a huge deal of cash to deploy in the market. Whatever little is there, that I think more or less investor psychology is to conserve and wait for things to clear out.
Well, Dipan, you have told us numerous times that your picks have been those private sector banks. You don't like the PSU banks and you don't mind paying a higher multiple for some of these NBFCs as well. Now, we are seeing some selling pressure out there. What would your advice be? Because that trade worked out perfectly well in the uptrend.
Yeah, absolutely. I think, the first on the buying list will be the quality NBFCs, which we are already owning, like, say, a Bajaj Finance or a Cholamandalam or even an HDFC for that matter. Some of these have come to attractive levels, and one needs to keep in mind that these NBFCs have been around for a long time, and they have weathered through many such major and minor storms. And I think this one also they'll be able to weather quite well. And once things settle down, you will realize that that's where the maximum and the highest secular growth is, and the compounding benefit is coming mainly in the NBFCs other than any other sector at this point of time. I know that many analysts are bullish on pharma and IT, but these sectors have become very volatile when it comes to their earnings and difficult to have visibility or predictability of their earnings, the type that we have in the NBFC sector. So I would just say that one needs to just wait and watch.
All right, Dipan, thanks a lot for your time. Saurabh Mukherjee of Marcellus Investment is also with us. Saurabh, good afternoon. As we speak, this month Bajaj Finance is down 23%. I don't recall when was the last time I've seen something like this. Kotak, HDFC. Your thoughts on what's going wrong with financials?
I don't think there's anything specifically going wrong with financials. I think we just got too optimistic about wholesale market funded lending models. We're still a country with per capita income of $2,000. We can't run a financial system entirely off wholesale funding. And, fund managers have got too excited about wholesale market funded banks, NBFCs, HFCs, and pumped their valuations to, ridiculous levels, 4, 5, 6, 7, 8 times price to book. So correction was long overdue. What precise reason the correction happens, whether it's ILFS, whether it's the 10-year bond yield, the rupee, in a way is somewhat secondary. You can't, logically say that 40% of the weightage of the Nifty should be financials. So financials have been significantly overvalued for I would say, good year and a half, and a long overdue correction is underway there.
So do you expect more pain ahead for the NBFCs? Have we, corrected ourselves in terms of the overvaluation or not yet?
I think we haven't even seen the beginning of the correction, if you ask me.
Lower do you think an HDFC or a Bajaj Finance or any of these blue chip NBFCs can go from here?
I don't think there's any point in worrying about stock-specific stories at this juncture. I think there's a long way to go. We had a macro, as I said, we had a macro trend wherein cost of funding for NBFCs fell from the 3-month CP fell from 11 or 12% in September 13 to almost 6.1% last summer. Summer of 17. So, if you have the cost of wholesale money almost halving in 4 years, obviously, wholesale funded lenders took off. And now that you're reversing the funding cycle, both on the domestic macro becoming healthier and global liquidity tightening, as you reverse the funding cycle, we will see a sustained correction in financials in totality. I wouldn't even just single out one or two NBFCs or HFCs. I think there's an overdue correction in the sector as a whole, and I think it's premature to get too stock specific at this juncture.
Yeah, in fact, Nigel, reimagine the last bar on Bank Nifty is 100 points. Once again, just pull out the intraday chart on the Bank Nifty. It was down about 460, 470 when we're talking. It's now down almost 600, and that's the Nifty Bank 584 points down. And I think we are now very close to Friday's intraday low. That is what you were looking at. So, really big decline now.
So, Saurabh, just coming back to you, what could really, turn sentiment? What would you like to hear? Crude is beyond our control, and President Trump as well, whatever he said didn't make much of a difference. The OPEC countries, they're saying we are going to do what we want. Crude is not in our control. But what are the other positive sentiments that can, can prevent this fall, from deepening even from here? What would you like to hear from the RBI, from SEBI, from the government of India?
So I think before I come to RBI, etc., I think given that there's a pretty full-fledged trade war now getting underway between China and America, there is a possibility, I would say, that crude does correct as the trade war escalates. If global growth starts slowing down and crude corrects, I think that is a major positive for India. We shouldn't rule that out.
Okay.
That we could get a positive a kick from crude if the trade war conks off crude. But coming back to matters closer to home, I think given how much the 10-year bond yield has risen, given the extent of pressure on the rupee, I do think everybody is better off if RBI moves to clarify its stance on interest rates. It's reasonably clear that we are set for meaningful hikes, and rather than us having to sort of wait till October, I think it would help if the central bank came out and cleared the air. There is clearly a defense required of a currency which is falling almost 1 rupee a week, and I think the central bank's clarity on that will be helpful. It is also helpful to know to what extent will RBI mop up liquidity in order to prevent the rupee, because one of the reasons that's spooking investors and financials is liquidity is tight and everybody is fearing it will get tighter as the central bank mops up more liquidity. So clarity from the central bank will be useful, and the other element that I think everybody will benefit from is some reassurance that ILFS's commercial paper will be backstopped by either the RBI itself or one of the larger PSU banks. CPs sit inside liquid funds, and liquid funds are not intended to take on this sort of credit risk that ILFS poses.